Hey guys, it's starting to get dark and the power's out, so I've got my grill set up. I'm starting a fire to grill some things. I have my night light here for lighting. So I wanted to talk about Keith McCullough and Hedgeye. This is Brian Lewis with MMT Investing, and things just changed. So Keith is the founder of Hedgeye, and they started at the bottom of the financial crisis, and they have been tracking market cycle data for the last 10 years or something, and they're really good. So as far as 3-month cyclical data, they get quarterly data, and they can start seeing 3 months or 6 months in advance, like what the market conditions might look like way before they switch. So I mean, Keith is one of the only people that like pinned down the top of the everything bubble, and he is not a long-term view kind of person, and he never talks about bubbles or anything like that. It's just market data and cycles. So he's a super cyclical investor, and he just saw we had upgrowth and upgrowth for 2 quarters, and then he just saw downgrowth and a credit contraction coming, and he called the top of the bubble and said it's going to be lower highs for the next 3 months, roughly based on the market data. So he's one of the guys that called the top, and he didn't do it with Austrian economics and bubbles or anything like that. He just looked at the cycles and just said like it's going to reverse. I mean, he's not calling like the top of the everything bubble. He says it's going to reverse, and then at the end it's going to go into different market conditions. And he always smashes that like button right now to help me out with the YouTube algorithm. Yeah, so their model is quarterly data that they get in about growth and inflation, and it's if the inflation is increasing from where you are, or if it's decreasing from where you are, that tracks the contraction or the expansion of the monetary supply. And then if you are having positive or negative growth, that tracks sort of the direction in the private sector. And if you just use those two, you get a quadrant map that has 4 quadrants. And if you have negative growth and negative inflation, which is what we have right now, he calls that quad 4. And he's like, it's deep quad 4 right now. It's deep quad 4, guys. And that is a large accelerating decrease in the amount of loans that are available, a decrease in the inflation. And then it's also a decrease in the growth. So when you get in those conditions, he has roughly 3-month outlook. It's like 2 to 4 month-ish outlook on those conditions. And when you're in those conditions, he just looks for lower highs. So it's just a down kind of moving market conditions. And then they look at different countries, and they look at different sectors of the economy and different ETFs to see which kind of sectors, like industrials or energy or consumer staples or gold or whatever. They have all these different ETFs and all these different sectors, and they say like this one does good in these market conditions, this one does good in these market conditions, and it does pretty well. I guess the only 2 things that I think are tricky about that is that their whole company and data models have been set up on this whole bull market, and they did call this reversal, and they know it's a steep down, just like it looks now, but like as to which sectors are going to do well in these market conditions, like they have data that says it'll do well in these market conditions if you're in a long-term bull market, but looking at it in a bear market, I don't know. You have to tilt everything downhill. So yeah, so anyways, it's really good cyclical data, and it's a longer term 3-month-ish kind of outlook. So I love they're trying to call like big reversals in the cycles, and that's super helpful. It's not as helpful for intermediate kind of trading and swing trading during the cycle. It doesn't really pin where the little intermediate cycle changes are going to happen or anything like that. Just the edges of the big cycle changes. And their products, their data products, are mostly for like big funds or something like that, and they're really expensive. But just as an individual, you can get. They have some email updates that give you the basic idea of the market data, and then the Hedgeye TV where Keith is drawing things and talking about the market and making jokes and stuff. It's really cool. So that's one of my favorite cyclical market data models, and they did call the top. And I mean, they were bullish during the bull market, and they were bearish during the down cycles in the bull market, and they're super bearish right now. It's deep quad four, and I've been watching him, and the bull trap has been going up, and he's just like looking at it like, oh, it's just, you know, a bounce, and you're gonna get lower highs, and now it's going down again. So pretty cool. Yeah. So Keith McCullough of Hedgeye is one of my favorite data people, and happy trading. Cheers.